Welcome back to Investing Talk Podcast. Today, we're tackling a really interesting one, a question that touches on everything from national security to the green transition. Is USA rare earth a good time to buy right now? And hey, before we dive in, just a quick reminder. If you get value from what we do here, please hit subscribe, like us, maybe drop a comment. Critically, too, if there's a company you want us to analyze, let us know in the comments below. We really do look at those requests.
Yeah, and USA rare earth, it's definitely a complex one, more so than usual, maybe. It's not just about digging stuff out of the ground, right? This company sits right at the crossroads of, well, critical mineral independence, national security stuff, and that whole massive shift to electric vehicles and green energy. So it's value. It's not just about the numbers on a spreadsheet. It's heavily, heavily influenced by policy. And that brings in a whole layer of, let's say, speculation and potential upside that we really need to unpack.
That's a perfect way to frame it. So our job today is pretty clear. Let's try to quickly get our heads around the fundamentals, the basic facts, then figure out the market mood, what's driving the price now, and crucially, pinpoint the big things, the catalyst that could change the picture for USA Rare Earth going forward. Really feels like a battle between the current financials and what the future policy might promise.
Okay.
Because let's start with that fundamental reality. If we just look at the books, the balance sheet, what are we actually seeing?
Well, first thing to grasp is that it's an early stage play, really early. USA Rare Earth is basically a giant startup. They're focused on getting things commercialized. Their whole value proposition hangs on developing the Round Top Mountain project down in Texas. And that's still very much a development project. It's not like they're actively mining and refining at full scale yet.
Right, and you see that starkly when you look at the financials. That heavy spending phase. I mean, the company isn't profitable, not even close yet. We're looking at a net income trailing 12 months of negative $107.51 million. That translates to an EPS of minus 1.72. Those are big negative numbers.
They are, but maybe not entirely unexpected for this kind of venture. It underlines the patience needed here. Those losses reflect the huge, huge upfront investment needed, right? Building the mine infrastructure, figuring out the complex processing, especially the refining bit. That's the really tough, expensive part of building a rare earth supply chain here in the U.S. It's basically the cost of entry if you want to do this domestically.
But what's also striking, and maybe a bit concerning, is the information gap. Our sources, they show pretty limited verifiable data on some core things right now, like recent revenue figures, consistent debt, or liquidity details, free cash flow. It's hard to pin down solid current numbers there.
Exactly. So how do you value it if there's no profit and the revenue picture is unclear? Well, investors aren't really valuing the present. They're buying into the future potential, the scarcity value. The consensus among analysts generally is that the company might hit break-even, maybe profitability, around 2028. That's still a ways off, obviously, but it's backed by these projections of really strong long-term demand for the minerals they're targeting at Round Top. Things like neodymium, dysprosium, terbium, gallium, lithium too, all critical for high-strength magnets, advanced batteries, that kind of thing.
And yet, despite being in the red, despite the data caps, the investor confidence seems, well, pretty staggering. The market cap as of early October 2025 is around $2.78 billion. Wow. That's not just speculative pocket change. That's serious capital betting on Round Top's success, and maybe more importantly, the strategic value of having this production in the U.S.
Right. How do you explain that massive premium? It feels like the mine is pricing in a kind of policy insurance. Investors are basically paying now because they believe the U.S. government simply won't let this fail. They're buying the strategic edge, which brings us to our next point, really.
Okay, let's talk about that strategic edge. What is USA Rare Earth's core advantage that justifies, almost $3 billion in market cap based mostly on potential?
It really comes down to location. Simple as that, almost. They control interests in Round Top Mountain, and people genuinely describe it as one of the biggest rare earth and critical minerals projects in North America, maybe the biggest.
Yeah.
That U.S. location, that geographic focus gives them a kind of strategic moat.
A moat because?
Because with rare earths, the real challenge isn't just digging up the ore, it's having the whole supply chain, particularly the processing and refining, done domestically, away from, geopolitical rivals.
And that domestic focus is getting a huge push from global politics, isn't it?
Absolutely. Trade tensions are up. Everyone's worried about secure supply chains, especially for materials needed for defense tech, EVs. So having a US-based mine and processing capability, that suddenly becomes incredibly valuable. It stops being just a mining play, starts looking more like a strategic national asset.
And this leads right into the policy angle, the tailwind you mentioned.
Yeah.
That seems to be the biggest driver lately.
Definitely. There's news, pretty solid news, confirming close communication between the company's leadership and the current Trump administration. That confirmed high-level access. That seems unique. It sets USA Rare Earth apart from other domestic competitors who might have deposits but don't seem to have that same direct line to D.C.
That's a really key distinction. So what's the speculation? What could this policy leverage actually mean for them?
Well, the speculation is running pretty wild, frankly. People are talking about potential direct federal investment, maybe the government taking an actual ownership stake, or maybe huge government contracts, or, and this could be the biggest prize of all, significantly faster permitting.
The permitting. That's always a bottleneck, isn't it?
Always. It can delay a mine for years, sometimes decades. If the federal government basically gives Round Top a green light, fast-tracks it, that doesn't just save time. It saves potentially hundreds of millions in costs and pulls that whole 2028 profitability timeline way forward.
So the big takeaway here isn't just, oh, maybe they'll get a grant. It's that this level of political engagement could fundamentally re-rate the stock's value. It shifts the perception from a risky mining venture to something closer to a quasi-federally backed infrastructure project.
Precisely. Changes the whole game. And you see that reflected directly in the market action. The stock has been on a tear in 2025, driven almost entirely by this policy stuff, reaching new highs. I mean, look at the 52-week range. $5.56 at the low end, up to $30.92 at the high. That's explosive.
Yeah.
And it's rooted in anticipation.
Yeah, and specific news lit the fuse, right? Didn't the stock jump like 18%?
It did, yeah. Jumped over 18% in sessions right after those White House talks were confirmed, pushing it above $32 temporarily.
Okay, so technically, where is it now? Recent trading's been around, what, $27.89 to $29.39?
Somewhere in that range, yeah. Seems to be finding decent support above $27, but there's definitely resistance up around that $31, $32 mark where it peaked before.
And there's an interesting technical detail here, too. The beta is low, 0.77. For listeners, a low beta means the stock tends to move somewhat independently of the overall market swings.
Right. And that fits the story perfectly, doesn't it? It suggests investors are accumulating the stock based on company-specific news, basically, the policy hopes, rather than just riding broad market trends. So if the whole market takes a dive, the stock might hold up better, potentially. But if good news comes out of D.C., it could surge, regardless of what the S&P 500 is doing. It really puts policy risk front and center, maybe even overshadowing general market risk for this one.
Okay, this brings us to maybe the trickiest part, the mixed signals. There seems to be a real contradiction in what the analysts are saying. The consensus rating is generally positive, right? Strong buy or moderate buy.
Yeah, that's what you see at first glance. But then, here's the massive red flag. The average analyst price target is $17.67.
Wait, $17, but it's trading near 29.
Exactly. You've got analysts officially saying buy this stock, but their own price target implies what, like a 40% downside from where it is now?
Like a huge disconnect. How do you even square that? Are they saying buy something they think is massively overpriced based on their own models?
It's baffling, isn't it? It suggests a couple of things, maybe. Either their models just haven't caught up with the intense policy speculation driving the current price, or perhaps they're being cautious, refusing to bake in potential government deals because nothing's signed, it's all still speculative. It really forces you, as an investor, to make a choice. Do you trust the fundamental models pointing to $17, or do you trust the geopolitical narrative pushing it towards $30?
And you see that split in the individual ratings, too.
Yeah.
Roth Capital reiterated a buy, maybe looking long-term.
Right, focusing on the big theme. But then Weiss Ratings slapped a sell on it back in September, probably looking purely at the negative earnings and the sky-high valuation on zero revenue. Two totally different perspectives.
And there's the insider activity. That adds another layer of, well, confusion.
Yeah, this is really interesting. A director, Michael Blitzer, sold over 2 million shares back in August.
2 million? That's a lot.
It is. And he sold them at an average price around $15.75.
$15.75. And the stock blew past that, now near 30.
Right. So a major insider selling a huge chunk well below where the stock subsequently traded. That definitely raises eyebrows about the near-term outlook, doesn't it?
It certainly makes you wonder, is that a lack of faith from someone on the inside? Or is it just, maybe taking profits on options granted years ago? Hard to know.
It is hard to know, and normally a sale like that would be a pretty big warning sign. But here's the counterpoint. During Q2, you had big institutions like New Edge Advisors, LMR Partners actually starting major positions, strong institutional inflows.
So the big money, the institutions, were buying while an insider was selling.
Seems like it based on the timing. The institutions appear to believe the potential upside from federal action outweighs whatever signal that insider sale sent. Blitzer sale could just be prudent diversification or cashing out old equity, sure, but it definitely complicates the purely bullish story. It shows not everyone inside necessarily expects this policy premium to last forever. It's a real tug of war in terms of signals.
Okay. That helps frame the volatility. Let's shift focus into what's coming up. Near-term drivers, catalysts to watch, especially as we head into Q4 2025.
Okay, near term. The big date on the calendar is November 6th. That's when they're scheduled to report Q3 earnings. Now, obviously, we're not expecting blockbuster revenue figures. What investors will be watching closely is any update on operational progress.
Like progress around top.
Exactly, updates on the development timeline there. And also, any color on how the recent acquisition is integrating. They bought that UK-based company, LCM, for about $16.7 million in cash and stock.
Right, LCM. That was about downstream processing, wasn't it?
Yeah, securing that capability, it was a serious move, shows they're thinking about the whole supply chain, so news on that integration will be important.
But let's be honest, the biggest potential catalyst, the one that everyone's really watching, it's still that federal partnership, isn't it?
Without a doubt. Policy announcements. Given the administration's stated focus on critical minerals, the expectation for some kind of favorable action, maybe regulatory help, maybe grants, maybe more, remains incredibly high. If something concrete materializes there, the stock could easily retest that $32 high, maybe break through it. That's the explosive potential.
Okay, anything else?
Well, there's more technical stuff. ETF rebalancing happens quarterly, usually around November. If USA Rare Earth gets added to or gets a bigger weighting in, relevant ETFs like strategic metals funds or maybe domestic manufacturing indexes that can create automatic buying pressure, which matters, especially for a stock like this that might have lower float and is driven by sentiment.
Okay, essential to balance this out, let's talk risks. What could derail this whole policy-driven rally?
Right, the flip side. Risk number one, and it's a big one, profitability delay. We already said analysts are looking at 2028, maybe later. That's already a long time to wait. If there are setbacks, project delays at Round Top, funding issues, unexpected permitting snags, and that timeline slips further out, say to 2030, investor patience could wear thin very quickly. That valuation premium could evaporate.
Which links straight to execution risk, I suppose.
Absolutely. Building out Round Top is a massive, complex engineering and logistical challenge. Huge capital needed. It faces project management risks, ongoing permitting risks, and just the sheer technical difficulty of getting the mineral processing right. Policy support is great, but the company still has to actually build it and make it work. That's a major operational hurdle, no guarantees.
And the sector itself is volatile, right?
Yeah. Always. Rare earths, battery metals. Prices can swing wildly based on global EV demand, new battery chemistries, and, crucially, geopolitics. Like, what if trade tensions ease unexpectedly and cheaper supply from China floods the market again, even temporarily? That would immediately hit the perceived value and pricing power of USA Rare Earth's future output.
Okay, so pulling all this together, what's the overall take?
Synthesizing it all. The thesis is definitely powerful, but it comes with significant risk. We'd lean towards an overall bullish rating here, maybe, let's say, an 8 out of 10 on the rationale. Because it is uniquely positioned, it gets the potential short-term kick from policy speculation, and it taps into that huge long-term secular trend of needing strategic minerals domestically. That high level of government anticipation almost acts like a floor under the price, while also providing that potential for huge upside.
So who is this stock actually for then? What kind of investor?
It seems like a bifurcated opportunity, really. On one hand, it could be attractive for shorter-term traders playing the news flow, especially any government-related speculation coming in Q4 2025. High risk, high potential reward there. On the other hand, it's also potentially suited for very patient long-term investors making a thematic bet. A bet purely on the U.S. needing its own secure supply of critical materials over the next 5-10 years.
A pure play on supply independence.
Exactly, but you need that long horizon and tolerance for volatility. So maybe here's the final thought, the provocative question for you, the listener, to wrestle with. Given this really unprecedented level of rumored and partly confirmed federal interest in this specific company, how do you weigh the hard financial facts? The negative EPS, the zero revenue right now, that insider selling. How do you weigh those against the potential for a single policy decision, something not even financial, to completely, fundamentally, and maybe instantly re-rate this stock because it's in such a critical national security linked sector? That conflict, that tension between fundamentals and policy hope, that's really what you're buying into right now with USA Rare Earth.
That is absolutely the essential risk-reward calculation you need to make. Well, thank you for joining us as we work through the sources on this one. We hope this analysis helps you navigate the complex and pretty exciting world of critical mineral investing. We'll see you next time on Investing Talk Podcast.